We are right in front of Cass Business School at the heart of the overcrowded city of London, known for its financial sector and big money. In this surprisingly peaceful and quiet garden open for meditation and private prayer. We're going to discuss finance and religion with Professor Philip Booth, who recently edited this book, Christian Perspectives on the Financial Crash.
The reason I wanted to do it really was because I'd heard so many Christian leaders talk about the crash, and particularly to do with technical issues about regulation and economics, on which they were making very bold statements in areas where they clearly didn't have the understanding to come up with prudent judgments.
What is the message you want to get across? Do you mean that if everybody had strong Christian values, this crisis wouldn't have happened?
I don't really accept that. I think that markets must be designed and regulated in such a way that they assume that human beings are imperfect, and therefore markets should be able to cope with a fair degree of immoral behaviour and indeed even reckless behaviour. And the important thing about a market economy is that people must pay the price of their own mistakes and must pay the price of their own immoral behaviour. It's very important that a market economy operates in such a way that people who behave unethically and badly in generally are brought to book by the market rather than by regulators.
One thing I particularly liked about your book is that the 11 co-authors do not always have the same point of view, but you all seem to agree on one thing. Surprisingly, regulation is not the answer.
Yes, I think there's a very good reason for that. It's not as if financial markets were not regulated at the time of the crash. Certainly in the UK and the US, in many respects, financial markets were regulated in a more detailed way than they'd ever been regulated before, and certainly in a more bureaucratic way than they'd ever been regulated before. We have to remember that regulators are drawn from the same stock of flawed humanity as market participants. So imperfect human institutions cannot perfect other imperfect human institutions. It's talking to people in the industry that people feel that if they've ticked all the boxes, that's fine. They've covered all the bases, they've behaved ethically, they don't need to do any more. And therefore there was a huge emphasis within large banks on compliance and much less of an emphasis on prudent risk management, ethical behaviour and so on.
The morality of charging interest rate is itself intensely debated among Christians. What is your point of view?
The Christian debate on this has evolved over a couple of millennia, and there are certainly situations where Christian theologians would regard it as unethical to charge particular people interest in particular circumstances. But Christians, or at least Catholics, believe that the Bible was written, it's a revealed word of God, but written in a particular context, and therefore one doesn't take all paragraphs of the Bible literally to be applied in our own current time and to our own financial system. There are question marks which some raise over whether or not the charging of what some would describe as excessive interest rates could be described as usury and should be outlawed, and that's an issue that's discussed in the book. My personal view is that regulating such things would cause more harm than good.
To conclude, I would like to let you read a paragraph you wrote, which I think is particularly relevant.
As Christians, we should try to make the world a better place by being better people. We should examine how we behave as consumers. Do we consume too much, have too much debt, and save too little? As bankers, do we hard sell inappropriate products? As directors, do we challenge the management and come out of our comfort zone? And so on. We should do this without questioning whether specific good will come from ethically correct actions, though no doubt it will. But, nevertheless, in an imperfect world, many honest mistakes will also be made, and some of those mistakes will have catastrophic effects. And I think that paragraph is particularly relevant because I don't accept the argument that immoral and unethical actions were necessarily the main cause of the crash. But nevertheless, the world will always be a better place if people behave in the financial sector and elsewhere in a sound, moral and ethical fashion. And in addition, it's important to have a regulatory framework, an economic framework in general, where people who take decisions which are unethical and immoral are not encouraged and actually have to pay the financial price of those mistaken decisions. And one of the themes which comes through 2 or 3 authors, at least in the book, is that the principle of bailing out banks fundamentally has to be addressed in any reform of the legal system that surrounds the banks.